Hello everyone, how's everyone doing? I hope everyone's having a good weekend and is excited for the new trading week. Today we're going to be doing the usual. We're going to be going over the outlook and we'll be skimming over the EOD for last week, and we'll also be going over the economic calendar. But before we get into all of that, I want to share with you guys a quick quote that I have screenshotted here from a passage that I'm reading, and I would like to share it with you guys because I found it to be very, nice in its saying. It's a kind of, it's tragic that I can't describe this sentence here with just the word nice, because I feel like this passage holds a understanding that I can't explain with just words, but it is inside of you to take this in and to fully ingest it. So let me read it really quickly. Study the teachings of the pine tree, the bamboo, and the plum blossom. The pine is evergreen, firmly rooted and venerable. The bamboo is strong, resilient, unbreakable. The plum blossom is hardy, fragrant, and elegant. Just wanted to quickly share that with you guys, and hope it can alter the course of actions that you guys may partake in your day, and that it has an effect on you. So before we get into the EOD of previous week and the outlook of this current week, I want to go over the economic calendar really quickly. So here I have a little screenshot. So Monday is a bank holiday, and I hope you guys were all cautious trading Friday, knowing that it was the last day of the week and that the next trading day would be not next trading day, next half day would be a bank holiday. And the rest of the week looks fine, honestly. Tuesday I'll be cautious because it's the day after a bank holiday and it's probably going to be recovering a little. So if I encounter choppy price action, I might just call it off and just tape read the entire day. And Tuesday seems fine, Wednesday seems fine, Thursday's good, and Friday is also good. So this should be a good week. There should be lots of movement. There's 2 weeks left until the federal funds rates news comes out, and I'm gonna be excited for when that day comes. But until then, let's focus on what we have here. So let's move into the EOD really quickly. Actually, let's do a quick outlook on the previous week, just a quick recap. So basically, I didn't have enough data to determine a bias, and I basically had kind of a sentence that explained here. So if we were to move higher, we would respect the order block and push through the breaker and the rejection block. So there's a rejection block here, and the breaker is this big portion here, and this is the order block that I would say that we would react off of it. And if we were bearish, we would start moving off of the breaker and inverse the order block and respect the CISD and reaper through the inversion, which is this little gap here. Reaper through the inversion. Through the inversion, we respect it and fill the wick. So reaper through this inversion, make this a reaper, and then push through this inversion. This wick, and fill it. And funnily enough, that did happen exactly on the next trading day. We pushed through the inversion height here, and we pushed through the half point of this wick, and we pretty much had the other half kind of confirmed. So let's move into the EOD quickly. It's pretty short. All my EODs are pretty short because there's nothing really I have to go over. Anyway, so we ended up delivering from the bearish arrays, as I just said, and then we started pushing through the bullish ones. So you remember that inversion that we had here. So you would push through it, through the CE of this wick, and then we had the other end of the range. And also reapered through this inversion. Then we referred to it once, and then we started to push through it a little bit, pushed through into this leg down here, into this mitigation block as well. And we found resistance off of there, and we started dropping lower. We created the relative equalizer, which we came very close to taking, but we just fell short of it because of a 1 hour gap that was within there. And here, okay, so let's move into the screenshot. So The final manipulation leg that we had from this low here to this high, which was the manipulation leg of this breaker. So we have a high, low, higher, high. This leg here is the final manipulation leg before it started moving lower. Standard deviation, and then it lined up with a order block here, right over here, and a mitigation block here, and we started to reject off of that higher. So price failed to push into the weekly discounted range, which is around there, but it did push into the discount of the premium, and we're now digging into this weekly fair value gap. So that's something that you can take note of. And we failed to reach consequent encroachment of this fair value gap within this week's wick. And we seem to have found resistance off of this volume imbalance overlapping with the breaker at consequent encroachment. So see, we drop lower, enter this volume imbalance, we very shallowly move into it, and then we direct off of this CE pretty perfectly. So that's it for the EOD, and that's it for the previous week outlook. That was just a quick recap. That wasn't too long, that was just 5 minutes or 6 minutes. So yeah, let's move into the outlook. This shouldn't take too long. There's kind of the same case as previous week. I still need more data, but I do have a side that I'm leaning on. So let's move into that. So I'm going to read, and then I'm going to go over screenshot how I do every single time. Okay, so we seem to be digging into our weekly fair value gap, rejecting off of the 0.25 level after stopping at the daily rejection block. That big wick lower that happened during previous week failed to reach this kind of the range, in which if we don't, then obviously it would be incomplete, and there would be missing fragments if we start to push higher, and don't just push higher if we don't. So basically what I'm saying here is that we start to reject off of this level here, 0.25 of this fair value gap, and then this within this wick here, we didn't mitigate a discount of this gap, of this range, sorry. So trusting any move higher would be incomplete, and there would be missing fragments of looking to see a push higher. But I'll do that in the following sections of this page here, so we'll move into that in just a second. So I also want to note the rejection of the consequent encroachment of the breaker. So remember that breaker that we had on the daily time frame. Again, I don't want to see this get respected, honestly, but it might hold technically because of this gap here, this small volume imbalance that we have here. And you can see price just kind of narrowly dips into that, and then we start to trade higher from there. And notice the rejection off of the CE breaker. Okay, so daily we seem to have rejected off of that volume imbalance, which is still in a premium, but it is still in a discount of the premium, so moving on off of it would be inadequate, but it is still possible. So we still didn't go into this mitigation range discount, but we did move into a discount of the premium. So the premium range, we moved into halfway of that, and it's possible that we move off of it, but it's not the best. It's still a missing fragment. I would, if I was sure of movement higher, then obviously I would, because of the nature of NASDAQ and, its tendency just to move higher year round, 24/7, mainly because of the US as a superpower in the world, and I don't think there will be any significant crashes within the NASDAQ or any stock market, just because of previous data and its tendency. And getting back to the point, a move off of the discount of the premium can happen, it's possible, but I wouldn't be comfortable trusting that as a bias said and done. So let's move into the next part. So this was the daily and this was the weekly. I forgot to mention that, but let's move into some more of the daily time frame. So note the fill of the inversion volume imbalance, which is overlapping with the new volume imbalance created in reaction off of it. This does tip a shift in order flow after reaching into these levels mentioned previously, which were the volume imbalance, the breaker, and discount of the premium. So basically, after moving our volume imbalance, this section here, we push through this volume imbalance that otherwise I would have wanted to see kind of respected, and then we overlap it with a new one, a gap here, and we drop back lower into this volume imbalance which we have inversed, and we start to drive higher. And this drive higher here is very significant, and I'll move into the 4-hour time frame. which will tell us way more details than we have just looking at the daily time frame, because within this body move up, it tells us a lot. So also, another thing I want to note, I don't have any text. If you measure the wick here, you can see that this day closed above the CE. So, technically it is kind of confirmed the other end of the wick, but we'll see what happens until then. So I want to add that the monthly open will be occurring in this week. That should give us a great head start to see where are the possible levels of manipulation and distribution according to order flow. So this is just for the future, not adding on to this week's outlook. Okay, so another reason why I said that we might be having shift in order flow is because of this, and this gives us lots of details. This is the first time in a while where a bullish array has been respected, especially with SMT at the intermediate term low. At the breaker fair value gap is very significant, and a move that we saw from it is very important to note. We are currently trading into that balanced fair value gap, and it's balanced because price traded through it, filled it, and then we had that big candle shooting through it and making it a balanced price range. It has been respected once. I want to see if price is going to respect it again this time or not. This will tell me whether price has switched order flow or not. If it pushed through it and it reaches for those relative equal highs, then it has most likely shifted to becoming bullish again. And this added on to within this candle closing above the consequent encroachment of this wick, so that kind of as the order flow has switched. So moving into this screenshot here, I want to add on to what I was saying. So as we move into that volume imbalance here, and we have this tap here, which gets stopped at this balanced range here, which is this gap that was technically inversed. It was closed through, but then we had this big candle shooting through it. And what price tends to do is it refers back to these gaps as a BPR or balanced price range, and then it delivers from them. Now my only concern here is that these overlapping gaps, this whole region of overlapping rays, this is the daily volume imbalance, this overlapping inversion volume imbalance, and this discount for unicorn fair value gap, which is this gap here. And this is a breaker because we have a low high, we have a lower low. The high is within this wick, then we have a higher high, and then we retrace back into there. And then we start to drive higher when we stop at this balanced price range. And maybe the reason that I'm guessing that we stopped at this balanced price range is because we haven't manipulated yet. And this candle here that pushes lower, that was our manipulation. And the push higher from there, which will go into lower on the hourly time frame, it gives more evidence towards a bullish bias, if we were to have one. Because this would be a second sweep on this fair value gap here on this intermediate term low, and that will give us like a breaker. And the SMT, well, from what I've seen and from experience, is that SMTs also hold and they can substitute for turtle soups. So yeah, so after we have this push higher, let's I think I have another chart here. Yeah, so here. So on the hourly time frame, you can see that once we have that SMT, first of all, we reclaim this inverse fair value gap, so we push through it once more. Note the wick that moves back into it, find resistance, and then starts to push higher within this balanced price range. And also, again, I want to show something that's fractal with the wicks, the content of the wicks. So you see, if you measure this wick here, this candle closed above the CE of it, and it reached for the other end of the range. So let me read the text I have here. Okay, so more importantly, the more premium gap is a bigger determinacy, because that will really tell us the story. So the story that I'm looking for is, are we going to move off of these gaps here, or are we going to reject off of these gaps here? So it's again the same as the last week. I want more data before I stick to a read on price. So that's basically it. So again, no real draw on liquidity, just looking to see how price reacts to where we are at now. Until then, I'm not sure about much. But I'm more leaning towards the bullish side as a bias and not a really read on price, just because of the fact that we cut through the balanced price range that's highlighted within dotted lines. I see no reason that we had to disrespect that premium array if we were to move lower. So this is very important here. So the same concept with the 4-hour time frame. Let me go refer to that again. this balance range that we had, we filled it, we closed above it, we pushed through it again, we refer to it again, and we respect it, we move lower, and we have this SMT. That's our manipulation. And if we start moving higher from there, that's enough evidence for me. The only thing that's lacking from this bullish kind of bias is the higher time frame discount. You see this push lower here fails to move into a discount of the higher time frame range, which we have yet to reach for the past, I think, 3 weeks. So that's something that I'm concerned about. And also the weekly breaker that we're rejecting off. That's also another thing that I want to keep note of. So that's kind of the only thing standing in the way of a bullish bias. And I'm kind of depending on whether or not we respect high time frame arrays, whether they be bearish or bullish. What it's looking like right now is that we might be having a shift in order flow towards the bullish side, and it's not a real bias, it's not a real drawn liquidity, but it's kind of a start for a real on price. So back to what I was saying, this balance price range, you see we can fill it, and we have that one big candle shooting through it, and then we have that manipulation. So this shot through this inversion here, that would have been kind of an inversion if there was if we had the manipulation first, and this probably wouldn't have happened, but this push lower was in order to have a manipulation, and it was also in the way of getting into this balance price range. So this is probably a reason why we had a weekly and fair value gap, is because we manipulate after we balance this price range. So basically what I'm saying is that if we were to be bearish, then this here is a premium array. And what do we do to premium arrays when we're bearish? We respect them. And what happens here? We push through it, we start to kind of tap back into it 1, 2, 3 times, and then we have that candle here, and you can see there's a small X there, and that's where a 15-minute second stage manipulation on a 15-minute gap happens, and then we have that big move higher that takes out this week's high. So my point is, if we were bearish, we would have rejected off of this, and we wouldn't have moved up this high. This wouldn't have been a manipulation. A move down here being manipulation is evidence that distribution would be bullish. Do you get what I'm saying? So manipulation was lower, into this low, taking this low, or SMTing it, and then we have that big push lower, disrespecting this premium gap, premium balanced price range, and we would have respected if we were to be bearish. So that's kind of a big thing that's making me lean towards the bullish bias. Now I think this is the final point. Also, note the unbreached outside liquidity that lies at the low highlighted. The only reason that we wouldn't have wanted to take that low was because the order flow was not allowing it. Stopping at that breaker fair value gap in orange at discount, that low is prominent because it is the low of the high inside the fair value gap when it was initially tapped into. And as it's tapped into a second time, we took that high. Notice how we failed to go down lower and engulf the up move and use it as an order block to move lower. That tells me that price has not any willingness to create a bearish arrays to respect them, and this is confirmed with the push to the balanced price range. So basically, in summary, note this high here that we had moving to this hourly fair value gap that we traveled lower from into this volume imbalance. As we travel once more, we go back into this hourly fair value gap, we take that high, we sweep it, and then we start to push lower. Now, looking at this kind of price action with just a clear mind, you would want to see this sell side here get breached if you were bearish. You would want to see this low get taken, be displaced through, push through with intent, and we close through this low, and then we refer to this up move here as an order block to push lower. But what happens here? As we take the high, we start accumulating. We have one drop lower, which doesn't quite make it to sell side liquidity and starts to move higher, rejecting off of this orange gap here in discount as we SMT this low, which is a very prominent low because of, as I mentioned before, it's a discounted gap, a unicorn gap to be exact, or a breaker for value gap, whatever you want to call it. And we start rejecting off of that. So if you were bearish, using the same concept as we used last week to get the bearish read on price, if you were bearish, what would you want to see? You would want to see this low get taken. But what happens? This low doesn't get taken. If you're bullish, what would you want to see? You wouldn't want to see this low get taken. You wouldn't want to see it get pushed through, and you want to see respect of this big region of arrays overlapping here. And what happens? We have that manipulation lower. Manipulation lower. That's very important. Once we start to manipulate lower, then that's a big indicator that we're going to start to move higher as a distribution higher, because then this wouldn't be manipulation. So we manipulate lower and then start to push higher, leaving the sell side liquidity unbreached. So note the signatures of shifts in order flow after tapping into a region of overlapping arrays. So I was talking about here, this small X here, how we had that big push through it after we had these multiple taps into there. So it's more clear on the 15-minute time frame. Where is it? Yeah, here. So as we tap into it, you see we have those kind of wicks that fail to go in there. And then once we got that big deep push into it when we had the SMT, then we start to get the signature in price that we want to push higher. First of all, with the second stage manipulation, giving us that breaker. Then we push lower here into this breaker for value gap. We reject higher. And then we have order block here that gets pushed into, then rejects higher. And then we have this strictly for value gap that we had in the hourly time frame. Here, this one right here. You see, we push into it and then we start to move higher. So those are all signatures of shifts in order flow after tapping into this region of arrays and having this manipulation lower, SMTing with that low, failing to take a sell side pool that we should have taken if we were bearish. And yeah, it's just a bunch of kind of evidence that we want to move higher. There's no evidence supporting lower movement except the missing fragment, the missing piece that we haven't moved into a dealing range discount. And that can be accounted for technically that we moved into a premium discount, discount of the premium. But again, that's still not what I would have want to see. I can't substitute that. It happens sometimes and it's very hindsight, but always if I'm watching in lifetime, I would want to see a move into discount. So those are relative equal highs acting as magnet for a price to push in if we are bullish, if we want to disrespect these arrays and push through these yellow boxes. This relative equal highs place is a very prominent area that price would want to dig into. Again, no withdrawal liquidity. I lean towards more the bullish side just because of everything that I pointed out, and have a good trading week. Now, before I go, one more quote just to make your day or to make you have a shift in mentality before going into this week. As soon as you concern yourself with the good and bad of your fellows, you create an opening in your heart for maliciousness to enter. Testing, competing with, and criticizing others weaken and defeat you. Feel like many people can apply this as well as myself. And yeah, I hope everyone enjoyed this video. Thank you all for watching. And I hope everyone has a good week. Goodbye.